Hello, everybody. So today I want to talk about MSTR and the Bitcoin Valley of Despair, because if you go on X, if you read the media, it sure feels like Bitcoin is going through a mini valley of despair of its own. You have Kalshi saying, oh, we're going below 50,000. You have the bears that are back, strong, betting on a $40,000 Bitcoin. And then what's going to happen, right? If we were to ever reach these levels, then they'll be saying it goes to 20. And if we were to ever reach 20, then they'll be saying we're going to 0. It's always the same pattern. It's always the same engagement farming, fear, putting a lot of fear out there. FOMO in order to discredit the hardest asset class in history, the hardest asset period that has ever existed. At least if you actually study it, you end up with that conclusion. A lot of people study Bitcoin. Another question, of course, is should we sell? Should we sell the Bitcoin for AI? Because this is what I think a lot of people are doing right now, and I think it's a mistake. Of course, these are just my opinions. No investment advice, no financial advice, no nothing. Just entertainment. Let's talk about this. So, when sentiment in the low is the lowest, and it sure feels like the sentiment is bad. I know some people use other crypto fear trackers. Some other crypto fear trackers show even more fear in the market. I'm using one of the more optimistic ones out here, but still, the past 7 days, I've just seen it drop and drop every day. It drops by 2 to 3 points every day, and we've had 5 days for nothing. We've been nothing but down for 5 days. As a lot of other assets, I mean, look at Snowflake after hours, right? Look at Micron yesterday. As other assets are hitting all-time high in AI, in the field of AI, we just see the slow bleed of Bitcoin. And the takeaway number one is that when the sentiment is the lowest, when the FUD is the highest, it's more often than not, a bottom sign. There is very little interest in Bitcoin. People are angry. People are giving up. People are picking timelines and showing you charts with short-term timelines and say, oh, look, we haven't got anything in 4 years. Oh, look, this is looking bad. You can always pick a chart to make it look as bad as you want. The peak fear is close, or at least it feels like it if you hang out on X. But in my view, as I look at Bitcoin and strategy, we are behaving opposite to a bubble. Neither asset is trading at all-time high whatsoever, especially not strategy, right? But Bitcoin is down, not quite, but almost. Well, not quite anymore, right? But it was down 50% roughly not too long ago. We're down about 40% right now from the peak, from the high. We still haven't recovered from 1010. We still have a lot of manipulation. And we also have real people exiting the market, real people selling to buy AI. So I'll get to that in a second in this slide here. First of all, why is Bitcoin down? Well, let's listen to Saylor, right? Saylor has been one of the bigger buyers of Bitcoin out there. And he talks about his effect on the market in this interview. Very interesting interview. Sam Vedas knows what she's talking about. I just wish she wouldn't post the interview 7 days after it was shot. Right, 7 days is an eternity. Why do you have to be so TradFi that you wait 7 days to post something? You record something, you should post it right away. Why do you have to wait 7 days? Anyways, off of my soapbox here. She's very good. That was a very good interview. Actually, asking the right question, asking Saylor, what's going on? Why are we not performing well? Well, because Bitcoin trades on macro. And the biggest macro, of course, that Bitcoin trades on is money supply. And money supply going up, we need the rates to drop. When the rates drop, hard assets increase. Hard assets like real estate, like Bitcoin, like gold, they tend to be divided by ever more dollars. The denominator will spike when the Fed starts dropping rates, which it inevitably has to. The bluff cannot continue unless we want to have a Great Depression. He inevitably has to drop rates. When he drops a rate, the denominator, the money supply, will go boom, will go crazy. It will look like the Micron chart. And when it looks like Micron, when money supply looks like Micron, go back to what was in 2020 or in 2008, When money supply looks like this is when risk assets perform. This is when risk assets can double real quick. This is when real estate gets crazy. This is when hard assets work, when you have money supply increasing. And this is conditioned, of course, on the macro, on the PCE inflation. So I think a lot of assets like Bitcoin and crypto related, they are waiting for tomorrow. Tomorrow is a big day. We have a PCE. The Fed cares about the PCE, and I think we're still going to have the Fed overhang until we realize whether Kevin Walsh is a dove or not. And it seems like Kevin Walsh is a dove, at least the best that I can say. But unfortunately for Bitcoin and macro, we have another big. So in addition to the interest rates being a problem, and we've just had 4 years of delaying the inevitable drop in interest rates, it's just been delayed for 4 years. Now we have a new chair. That chair gets the benefit of the doubt, at least in my book, right? And in my book, I don't think it's possible to do worse than Powell. At least that's my opinion, just my opinion. But we also have, unfortunately, this macro uncertainty in the Middle East. And of course, Bitcoin was doing well a few days ago because everybody was like, we're going to have a deal. A deal is almost there. Didn't we have a tweet? A deal is almost there. Well, Saylor reporting 4 hours ago that actually we should not make a deal. The president saying we're not sure if we should make a deal. What is going on? This is insane uncertainty. Nobody really knows. You have people taking victory lap before anything happens. You have meetings here, meetings there. It's a complete mess. We need to know what's going on in that situation. Are we going to keep it shut for 3 years, or are we reopening it? But dragging is not a good solution, right? Dragging is not a good solution. If they decide to keep it shut, right, you could hold the situation in the Middle East at a standstill. You could be at a standstill 4 years. Well, the Middle East needs to know, right? And then Qatar, Saudi Arabia, the UAE, they can start working on pipelines. You can get the stuff out via pipelines. They just need like a year and a half to build it. The problem is that they're not going to build it if they keep being hopeful week after week that it's going to reopen, because it would be a sunken investment, be a pointless investment. So anyways, this macro uncertainty is really bad for risk assets, bad for Bitcoin. And then, of course, perhaps, and we don't really know about that. I mean, we know IBIT has not been doing well. IBIT has seen outflows. There's been outflows from IBIT. We know that. But the narrative, could make sense if you believe that retail is kind of like this buy the top type of trader. You have people perhaps FOMOing in to smaller AI names, and they see Western Digital, they see Micron having 7x or 8x in no time, and they go ahead, sell their Bitcoin, who's down 50%, and you sell the Bitcoin and you just go ahead and buy Micron, 7 times more expensive than what it was trading a few months ago. Momentum style investing, definitely not my style of investing. I like to have a deal. I don't like to buy the top. I never buy the top. I hate it. I'm cheap when it comes to stock, at least. This AI thing going on right now, like, I'm not denying that Micron could be worth $1 trillion over multiple years. But to me, it ran too hard, too fast. It ran harder than what crypto used to run, just like Micron just run. Crypto used to run just like Micron just run. And I think we are seeing short-term some FOMOing effect. And this is especially true when, in my view, we have proven AI leaders that remained. I'm not going to use the term underloved, because if I do that, people are going to yell at me for calling Palantir undervalued. So I'm not going to use the term undervalued. For NVIDIA, I wouldn't have any problem using the term undervalued, but I'm using the term underloved. If you look at Palantir, it's been a stable coin for how long now? It hasn't moved. It hasn't done anything. Yet the quarters are still stellar, absolutely stellar prior quarter for Palantir and NVIDIA, both stellar as it gets. Yet for some reasons, these stocks don't move anymore. You see, we've reached a point where they don't move anymore. Like after the 2 quarters we have the past 6 months for NVIDIA at 212, I find it a deal. This is a stock that, if you annualize that, the stock price has grown 35%. The revenue growth at NVIDIA is way more than 35%. So this makes very little sense to me. And this is where it gets inconsistent, where you see some AI names are just exploding, and other AI names, those presumably that make the most sense, like NVIDIA, right? I like NVIDIA on this channel. To me, it makes a lot of sense. It seems to be underloved, as if the market was getting excited by the new shiny things. New shiny thing. And of course, you have the final thing, which is the idea of some people selling Bitcoin to get into the SpaceX IPO. And I think a lot of assets who drop in value, people will try to say and explain, oh, they drop in value because people are selling to buy the SpaceX IPO. So we have all of these negative narratives for an asset like Bitcoin, and still no action on the Clarity Act. We don't know. We just don't know. It's just high uncertainty. And so studying Bitcoin helps you sleep well at night, because it's over the long run, right? Over the long run, you sleep like a baby if you think about these assets over the long run. But if you follow them day to day, they can be very frustrating to own. This is why a lot of retail traders, retail investors don't end up having the outstanding returns. I mean, at 154, strategy is still a 8x, something like that from when I first covered it. Most people don't end up with those because they don't have a conviction, and they sell at the wrong time, and they just don't have the conviction to hold it, because, as always, Bitcoin is and always has been the most frustrating asset to own. It's just a frustrating asset to own, plain and simple. Today's strategy, underperforming Bitcoin. Anyways, I'll conclude with this and stretch. We're still not back at 100, of course, but in my view, like I said, stretch. What matters is really the 3 days or the 4 days prior to being ex-dividend. When it comes to stretch, it seems to be the only thing that matters. That's when people really pile in because they want to arbitrage, they want to collect that ex-dividend date. So stretch, I'm gonna change a little bit how I analyze stretch, and I will judge stretch really the 3 days before the ex-div date. The ex-div date creates a tremendous excitement for an asset like stretch, and this is where strategy is in a good position, because it can see what happens to SATA. It can see how the market reacts to SATA. It is possible that if you move to a daily dividend, the market is the hedge funds, the arbitrageurs, they're just plain and simple not interested to catch a ex-dividend date that is 1/22nd or 1/21st, what the ex-dividend date is right now. For stretch, perhaps semi-monthly is the sweet spot, even though the theory says it shouldn't be the sweet spot. Daily, hourly should be the sweet spot, right? We can't do hourly, of course, but this is my reference to Matthew Crowder criticizing, you should flow. The funds should flow all the time to avoid this arbitrage. But maybe the arbitrage is the reason why we get so much pressure, buying pressure on stretch the 3 days prior to the ex-dividend date. Anyways, let me conclude talking about Bitcoin. If you believe in AI, if you think AI will revolutionize everything, if you think robots are going to build houses, robots are going to build all sorts of stuff in the economy, if you think we're going to have automation galore and everything's going to be automated, you believe in a world of abundance. That means we're going to have tremendous abundance because the machines are going to do everything. And right now we're at the stage where the machines do all of the thinking. They do all of the thinking. With embodied AI, they might do all of the hard work. All of the physical world work might be done by the machines. If you believe in this extremely optimistic vision of AI, which if you believe AI stocks are booming right now, and they certainly are, then they're booming because of that vision, because of that overly optimistic vision of AI. Not overly. I don't think it's overly optimistic. I just think the market is getting ahead of itself. Don't get me wrong. AI over the long run, I fully believe it. I just think we've been too fast. This month of May has been too fast for some names. Not all. Some names. It's been too fast. If you believe in that future of crazy abundance, thanks to AI, then Bitcoin should be pumping. Bitcoin provides absolute scarcity. You cannot create more Bitcoin. It is fixed into the code. It provides absolute scarcity. But you just can't. For an asset of this size, right? For $1 trillion asset, you cannot find better scarcity. At least in my view, right? And not in my view, or not just in my view. If you actually study Bitcoin, you will likely also know this conclusion. So in a world where everything is abundant, in a world where robots are building houses left and right, in a world where excavators, Caterpillar excavators are built by machines and operated by machines via satellite and via AI, and they can just print new land off of the coast of every beach town in the world. Even land can be demonetized because you can just have an excavator just add more land because it's a machine, right? And at the end of the day, if you live in that world where AI does everything and physical AI does everything, what is it that remains valuable? Absolute scarcity, like the one created by Bitcoin, not gold. Because gold, what happens if you have the machines? The machines can dig for more gold. The machines can dig for any sort of natural resource and make them more abundant, right? And energy to power these machines. So energy and Bitcoin. That's the conclusion that I would get if I were to look at AI being so successful. Then the true scarce resource is energy and Bitcoin, becomes energy and Bitcoin. So anyway, and of course we know there's a very strong relationship between Bitcoin and energy costs. Bitcoin is refined energy, right? Bitcoin is a little bit like aluminum. Anyways, you get it. So because it takes a lot of electricity to create Bitcoin. It takes a lot of electricity to create aluminum. It takes a lot of electricity to dig gold out of the ground. So the true value here is one and the same. Anyways, hopefully I didn't go too theoretical on this one. But if you are a older Bitcoiner, I'm sure you will appreciate. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe. Follow me on Patreon. Follow me on X. Thank you for watching and have a wonderful, wonderful day.